Hello, very good morning to all. I'm Kelvin here again. Welcome back to today's Daily Dose of Market Insights. Very good morning. Today will be Tuesday, the 10th of June, 2025. So as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick jump in or quick summary of what has taken shape yesterday in terms of relevant news flow, economic data release, and as well as any important news that actually is driving market in today's early Asia session as well, in respective to their respective to the intraday cross asset movement. So with that, let us now focus on the US stock market movement yesterday first. All right, so on the US stock market movement yesterday was a rather I would say that lackluster session. Initially it actually ended with a strong push up at the first half of the US session, where the S&P traded almost to a high of 6,020. Then thereafter it thundered down towards 6,005, but managed to hold above the psychological level of 6,000, where it managed to have a initial bullish breakout at the start of yesterday's US session in the first half. All right, so the movement of the intraday movement of these major US stock indices that's being seen yesterday. Initially, there was a strong push up. Then after this push up dwindled down into the close of yesterday US session. Very similar that was seen on the Nasdaq 100 as well, and as well as the Dow Jones Industrial Average. So the net result overall is that marginal gains was seen in the major US stock indices. Nevertheless, the Dow Jones ended unchanged. So the SPX ended with a gain of 0.09%, the Nasdaq 0.17%. The outperformer was the Russell 2000, up by 0.57%. The reason about why is this kind of we call it a not so rosy movement at the end of the US session is because of the ongoing US-China trade talks over here. Because at this point in time, Trump towards the first half of at the end of the first half of the US session, Trump made this comment that China is not easy, as yesterday's trade talks between these two superpowers, US and China, held in London, ended with no public comments from both sides. So apparently it means that there's no consensus that's being made, and these trade talks between US and China will continue in London today for the second day. All right, so basically the key issue to look out for is that both parties tries to ease tension, firstly over shipments of technology and rare earth elements. All right, so basically let me share with you in a brief nutshell. Rare earth elements are pretty much required by US to actually solidify their electronic vehicle industry and as well as their defense industry. And this rare earth supply or elements is being in the world right now is being controlled by China, and China now is actually stopping significant amount of shippage or exports to US. And meanwhile, shipments of technology is being controlled by US, where China now sought to become a powerhouse in high tech arena. That means we're talking about semiconductor chips that are required to build AI capabilities, and US right now is choking off this kind of high value technology parts to China. All right, so basically the second round of talks will be, okay, the advisors will meet again Tuesday 10 a.m. in the British capital. All right, the official says. All right, so 10 a.m. that means 10 a.m. London time. That means Singapore time. We're talking about 5 p.m. All right, over here. Okay, so basically markets are kind of in the tender hooks over here in yesterday's US session. But what's interesting over here is that we also start to see a very volatile movement on the FX market as well. So if you look at the FX market over here, is that initially the dollar sold off in the US in yesterday's session over here, but starts to recover in today's Asia session as we are speaking over here. All right, and this recovery is being led in the yen weakness over here. So how do I do that? If you look at the 1 day performance over here, there was this early rebound. Okay, so basically right, there's this early bounce up in the dollar yen over here. So right now the dollar is up by 0.28%. The dollar is seen as the strongest against the yen over at this point in time. So if you look at the dollar index, this is what I see dollar index. So the dollar index yesterday edged down marginally to negative 0.2%, and in today's Asia session is up by 0.18%. And this good dollar gain in seen during Asia session is being seen in the weakness of the Japanese yen. So what I could see over here is that in the last we call it in last Monday, that means we talk about around 1, 2, 3, 4, 5, 6, 7 in the last 7 trading days, the dollar index has starts to actually trade inside this range configuration. All right, over here. So it seems to be this is like a bearish pennant potentially, as it's try to actually consolidate right below the downward sloping 20-day moving average that is acting as a key intermediate resistance at 99.60 over here. Right, so let's put it right here, around 99.60, yeah, or 99.66, right? Okay, so the reason why the yen is the weakest major currency against the dollar this morning in today's Asia session was actually a kind of a dovish comment being made by BOJ Governor Uda around 1.5 hours ago, as he actually spoke in the Japanese parliament. So he did mention that underlying inflation is still below 2%. So I'm not sure why he keeps saying that inflation trend is still below 2%, despite the fact that we have started to see hard data in the last few months since the start of this year. Japanese inflation, both on nationwide and the Tokyo inflation number, is actually slowly inching upwards to go past the 2% mark. So I'm not sure why is he still making such dovish comments saying that inflation is still below 2% in today's parliament session. So that's actually explained to us why the dollar rallied in today's Asia session. But what's interesting over here is that later I'll share with you the dollar yen right now, the gain starts to dwindle down as the earlier rally managed to see a bit of downside pressure as it approaches the 144 we call it this level here over here one as it try to trade around the high about the 145, okay, 145 level, where prices starts to actually inch back downwards. All right, so around the 145 level, there's a key resistance level which I highlighted earlier, and right now the dollar yen seems to be tracing out a bearish reversal short-term intraday technical pattern. Okay, later I'll cover in my second segment of today's daily market side to share with you guys what is this potential looming bearish reversal pattern that's being seen on the dollar yen. Okay, that means i.e. what I'm trying to say over here is that whatever bounce that's being seen in right now, it could be a dead cat bounce on the dollar strength in today's Asia session. Okay, so what's interesting over here is that as we are speaking, we start to see a bit of risk on in the Asia session on the stock indices. Okay, so what do I mean by that? Let me share with you my screen. Okay, both the Nasdaq 100 and the S&P 500 E-mini futures. So the Nasdaq 100 E-mini future is up by 0.6% as we are speaking right now over here. All right, up by, so there was a strong rally up, and it now managed to clear above the peak that was being seen on last Thursday. Okay, very similar on the E-mini futures as well on the S&P 500. Oops, this is the Nasdaq. Where's the E-mini? The E-mini. All right. So this is the E-mini futures managed to clearly broke above the the former minor swing high on last Friday as well at around the 6,024 level. So this is the E-mini futures. So later I'll share with you what are the key levels to watch out for today on the CFD index that we have in our platform on the S&P, the Nasdaq, and as well as the Dow Jones Industrial Average, which is represented by the US Wall Street 30. And also, given this positive feedback loop that's been seen on the E-mini futures on both the S&P and the Nasdaq, it also created a very strong rally back into the major Asia stock indices. The Nikkei 225 is up by 1%. The Hang Seng is marginally up by 0.24%. All right, so that sum up the first segment of today's daily dose of market insights. So let me now share with you the second segment which is the intraday technical outlook. All right, so let me expand my screen so that you guys could have a better view of the charts. Yeah. Okay. All right, so let us start with the FX market over here. So over to the FX market. So what you could see over here is that the euro dollar starts to trade sideways. So yesterday, during the start of the Asia session, the euro dollar rebounded. Then thereafter, that rebound starts to lose steam and it trades sideways in the entire European session. And today's Asia session managed to see intra session sell off at the 9 a.m. mark over here, and thereafter it starts to make a pause over here by forming this hourly bullish reversal candlestick. Okay, what you could see over here, okay, this is the bullish reversal candlestick, a bullish hammer at the 10 a.m. hour mark over here, and right now it's also trying to form another bullish reversal hammer candlestick as we are speaking, as it starts to trade at the 11-hour mark Singapore time. All right, so given this appearance of such bullish reversal candlestick right at the first support level at the 1.14 figure level, there is still some signs of bullish bias still pretty much remains intact on the euro dollar. So given the fact that this sell off in the euro dollar at the 9 a.m. mark is more pertaining to that very strange dovish comment that is being made by BOJ Governor Uda in the parliament, in the Japanese parliament a while ago, which I highlighted in the first segment of today's daily dose. So still no change, still watching very closely the 113.60 short-term pivotal support, which we highlighted on yesterday, still maintaining that potential bullish bias for a recovery scenario on the euro dollar. First resistance level to watch out for today will be 114.80. All right, only our bearish break and hourly close back below 113.60 that would invalidate today's intraday bullish bias to kickstart another round of corrective decline sequence, exposing the next near-term support zone at 113 figure slash 112.70, which correspond to the rising 50-day moving average as well. Okay, so that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar also same, managed to shape that bullish reversal candlestick, the bullish reversal candlestick. Now right at the first support level, which is at 135.35, and also the pullback support of that former minor descending resistance that I drew from the high of 26th of May and 27th of May. So i.e. no change, watching 134.90 as my short-term pivotal support level for today on the sterling dollar. So I'm still maintaining that bullish bias for that recovery scenario. Then I'm watching very closely the minor swing high of 135.80. A breakout above 135.80 may expose the next resistance at 136.40 next on a intraday basis. However, if price action starts to thunder downwards and have a bearish breakdown and an hourly close below 134.90, today's intraday bullish bias will be negated to see a further slight back towards 134.50. That will be the next near-term support level to watch, which correspond with the rising 20-day moving average. All right, so I'll be on the lookout for, is there any signs of a bullish reversal candlestick at 134.50, given the fact that it confluence with the rising 20-day moving average, and as well as the minor swing low area of 30th of May and 2nd of June, where previously at this level it attracted a multi-day rally, okay, that lasted till last Thursday, right? So a key inflection level at 134.50, okay, to watch out for. All right, so net overall, meanwhile, still maintaining our intraday trend bullish bias for recovery scenario, still using yesterday's short-term pivotal support level at 134.90 to maintain this bullish intraday outlook. Two resistance level to watch on a intraday basis for the sterling dollar. First one will be at 1.3580, then thereafter followed by 1.3640. All right, so that's for the sterling dollar. Onwards, next will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So the Aussie dollar continues to actually inch higher, and right now it seems to be forming a minor ascending channel from the minor swing low of 30th of May. Okay, so what I do over here, I draw this right nicely. Okay, so it seems to be forming this minor ascending channel, and what we are seeing right now is that the current price action, the sold off that was being seen earlier, due to that dollar strength that's been inflicted indirectly by that strange dovish comment made by BOJ Governor Uda, managed to find the support at the first level, that first support that we highlighted yesterday, which is the 65 figure level. And given that price action can't break above the upper limit of this range, 65.37, 65.45, so this range is very important. So in fact, this 65.37, 65.45 is this weird complex sideways range configuration that has taken shape since April this year, late April this year. All right, so only bullish breakout above 65.45, that I would tighten my short-term pivotal support level to the 65 figure level. So meanwhile, I'll still use yesterday's pivotal support 64.75 as my we call it a make or break level to maintain our intraday trend bullish bias. First resistance, no change, 65.37, 65.45. Only a clear bullish breakout above this level will potentially trigger off a start of a fresh impulsive upmove sequence. In first step, looking out for the 65.80 intermediate resistance next, which is also the upper limit of this ongoing minor ascending channel that I drew from the low of 30th of May. And 65.80, if you go back over here, is in fact the congestion area of 11th of November and 12th of November last year. Only a bearish breakdown with an hourly close below 64.75 that would potentially invalidate the intraday bullish bias to see a further choppy sideways, choppy corrective decline movement back into the middle part of this complex sideways range. Next resistance to watch will be 64.45, which confluence with the 20-day and moving average. Below 64.45 may expose 64.07 next. So that's for the Aussie dollar. Next up will be the dollar yen. So what I mentioned earlier on, dollar yen now is tracing a very interesting pattern. So we know that the earlier rally, this rally here that kickstarted when BOJ governor is giving that weird dovish comment, can't actually have a bullish break up above our pivotal resistance that we highlighted yesterday, the 145.35 level, 145.35 level, and it started to form a bearish reversal candlestick, which is a shooting star. And right now, as we are speaking, price action has a negative follow through. And what's interesting over here is that at the top of this 145.35 short-term pivotal resistance that we highlighted earlier, the price action of the dollar yen that is being seen on the rally on Thursday itself has taken on the form of a bearish ascending wedge. What I mean by bearish ascending wedge is being due by these two converging line from linking up the higher high and the higher low. That means what you could see over here is that this is a converging line over here as the price gap get narrower towards the apex of this bearish ascending wedge. So why is it considered as a bearish ascending wedge? Think about it is that the slope of the higher high is lesser than the slope of the higher low. So that's why these two lines converge towards the apex. But nevertheless, given the fact that we start to see this bearish reaction candle right exactly below the predefined 145.35 short-term pivotal resistance level, give us a bit of confidence that the bulls seems to be a bit hesitant right now, and we will still for sure maintain our intraday bearish bias view, using the all-important 145.35 as my pivotal resistance level. First support level to watch out for today will be a new one at 144.40, which is the minor swing high area, former minor swing high of 4th of June, and as well as the intraday low that we see so far, 144.40, and also confluence with the lower limit of this bearish ascending wedge configuration. So think about it that 144.40 is a potential downside trigger level, and it also confluence with the 20 and the 50-day moving average. So if you start to see a very clear bearish breakdown with an hourly close below 144.40, that would actually indicate that that rebound that is being catalyzed by that BOJ governor's unusually strange dovish comment about inflation trend in Japan, that could potentially see a intraday downside trigger level that's been taken up, and potentially expose the next near-term support level at 143.50 for today. However, if price action and below 143.50 may revisit 142.35, where the bears managed to actually hold the fort so far, or the bulls managed able to hold the fort, preventing the bears from staging any much more further damage to the dollar yen since 26th of May. Only a sudden bullish reversal push up and hourly close above 145.35 that would negate today's intraday trend bearish bias to see a squeeze up to retest the minor swing high of 29th of May, 15th of May, and as well as 16th of May at 146.10. All right, so that's for the dollar yen. Okay, onward next will be the major stock indices, starting with the Hong Kong 33 that is representing the Hang Seng Index. So the Hong Kong 33 yesterday returned neutral, and given the fact that today it managed to clear above the upper neutrality limit at 24,180 over here. So given the bullish break of that 24,180, and the hourly RSI continues to shape a higher low over here, we will actually flip to a intraday trend bullish bias for today, given the fact that bullish momentum is now clearly back into the Hong Kong 33. So using 23,900 / 23,750, which is the minor swing low that is being formed on Friday, and that actually led to this current minor V-shaped recovery. That will be my pivotal support zone. Resistance level to watch next will be 24,490. Above 24,490 exposes 24,850, which is the medium term ascending channel upper limit that I drew from the low of 16th of April. And as well as 24,850 also confluence with the medium-term swing high of 18th of May and 18th of March and 19th of March, pardon me. Only a sudden bearish breakdown and hourly close below 23,750 that would invalidate today's intraday trend bullish bias to see it floating downwards to retest the 20-day moving average at 23,440. If 23,440 can't hold, potentially there could be a deeper minor corrective decline towards 23,060, which confluence with the lower limit of this medium-term ascending channel from the low of 16th of April. So that's for the Hong Kong 33. Next up will be the Nikkei 225 or the Japan 225 representing the Nikkei 225. So very clearly it managed to actually clear above the 200-day moving average, and right now is attempting to break out above the resistance level that we highlighted yesterday at 38,460. Hourly RSI is now back to the overbought level, but there is no signs of a bullish exhaustion move as the RSI continue to trace out a series of higher high. So potentially there could be a minor pullback taking shape over here, given that the RSI has really hit the overbought level. So pullback support level to watch could be this minor swing high turns into a pullback support level at this 38,160. So I'll be using an adjusted upward, slightly upward, pivotal support level, which confluence exactly at the 200-day moving average, and as well as yesterday's Asia session low area at 37,920. So 37,920 adjusted short-term pivotal support level still maintain our intraday trend bullish bias. After 38,460 may expose 38,850 next. Only a bearish breakdown with an hourly close below 37,920 that would invalidate today's intraday trend bullish bias to see another round of choppy movement decline back towards the middle part of this range at 37,680, which correspond to the 20-day moving average. Breakdown below 37,680 sees it goes down to the bottom of this range that was previously supported since 2nd of June at 37,270 next. Right, so still maintaining a intraday trend bullish bias with a adjusted upward short-term pivotal support for the Japan 225 at 37,920. Next up will be the Germany 30. So the Germany 30 yesterday in the European session managed to stage a minor push down, but this push down managed to stall right exactly at the pivotal support of 34,080, and the RSI managed to swing back up from the oversold level. And what's interesting over here is that the hourly RSI has started to stage that bearish breakout as well over here. Right, there's a bearish breakout on the hourly RSI. Okay, and so the RSI has really starts to inch back up above the 50 level, indicating that bullish momentum has starts to come back on the Germany 30 after yesterday's minor pullback that managed to start right exactly at our short-term pivotal support level of 34,080. All right, so still no change using 34,080 as my short-term pivotal support level. First resistance to watch for today will be at 24,440/560. Only a bearish breakdown and hourly close below the 24,080, now also confluencing very closely with the rising 20-day moving average. That would negate today's intraday trend bullish bias to kickstart another round of a choppy corrective decline sequence to revisit 23,820/23,675 next, which is also the gap up support level that's being formed on 26th of May. All right, so that's for the sterling dollar. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 yesterday continues to trade sideways again, come break above the lower limit of that 42,870 level, resistance level. So still no change. I do not want to tighten my pivotal support to be so tight at the 20-day moving average, which is our first support level at 42,580. That price action managed to actually see a bounce right at the second half, right at the start of the US session yesterday. So still no change. 43,310 will still be my short-term pivotal support level, given that it confluence with the 20-day moving average. Above 43,870 may expose 43,085 next, and with a breakout above 43,085 may see the next intermediate resistance coming in at 43,920, which is the minor swing high area of 4th of March this year. Pardon me. However, if price action starts to thunder downwards and have a bearish breakdown with the hourly close below 43,310 level, that would invalidate today's intraday trend bullish bias to kickstart another round of a choppy corrective decline sequence, exposing the next near-term support level at 42,100 and even potentially 41,850, which is the minor swing low area of 27th of May, 29th of May, and 3rd of June. All right, next up will be the S&P 500. So the S&P 500 continues to actually trade a series of higher high as it managed to actually hold above the psychological level at the 6,000 level mark over here, and it's now fast approaching our first resistance at the 6,050 level. And given that it's fast approaching a resistance 6,050, there could be a risk that there could be a minor pullback taking shape thereafter. So minor pullback, first support level to watch will be 5,980. Unless it can clear above 6,050, then I would tighten my short-term pivotal support to 5,980 just to prevent any whipsaw. So the pivotal support level still remains unchanged at 5,940, which is a key support level. Number one, it managed to survive that sell off that has taken shape on Thursday and Friday, and also right below the rising 20-day moving average. So using 5,940 as my short-term pivotal support level, first support level to watch 5,980, still maintain the intraday trend bullish bias on the S&P 500. Next resistance to watch after 6,050 will be 6,093, which is a Fibo extension cluster level, and a breakdown below the only a breakdown if only a bearish breakdown with an hourly close below 59.40, that would invalidate today's intraday trend bullish bias to kickstart a corrective decline sequence on the minor scale to expose the next near-term support level at 58.50, which is the minor swing low of 27th of May and 30th of May. Lastly will be the Nasdaq 100. So the Nasdaq 100 cleared above the former minor swing high of last Friday at this 21,887 level. All right, and given that the hourly RSI now has starts to actually inch down from the overbought level, so there could be a risk of a minor pullback taking shape during the start of the European session. So minor pullback support level to watch will be this former congestion zone over here, where price action hit on last Friday and traded sideways before a strong rally that's been taken shape in today's Asia session as we are speaking. So this could be a pullback support level at 21,806. All right. So I don't want to tighten my short-term pivotal support level to be so tight at 1,806. So I'll be still using the 21,500 level as my short-term pivotal support level. Pretty key level where price actually managed to survive on last Thursday and Friday before shaping that minor V-shaped recovery, and also right exactly at the right below the 20-day moving average as well. So 21,500 short-term pivotal support, still maintain that intraday trend bullish bias in any potential minor pullback. Next resistance level to watch after 22,050 will be the all-time high area at 22,200 slash 22,250. Only a sudden bearish reversal push down with an hourly close below 21,500 that would invalidate today's trend bullish bias on the Nasdaq 100 to kickstart a minor corrective decline sequence, exposing the next near-term support zone at 21,180 slash 21,015 next. All right, so next up will be the commodities asset classes, starting with gold XAU slash USD. So for gold XAU slash USD, what you could see is that price action now has starts to move back down again the 20-day moving average over here. All right, at 22,000 32.77 32.52, and given that it's really coming very close to this level, no point to be bearish again, because price action really kind of made this object very close to this first objective of 32.77 over here. So yesterday we do highlight a first resistance to watch will be 33.46, where it can't surpass yesterday. So yesterday price action rallied heading into the second half of the US session, then thereafter it turned downwards right below 33.46 over here. So given that it's really coming very close to the support level at 32.77, no point having a bearish bias over here. So I will have a bullish bias instead, given that the price has already dwindled downwards and is now coming back towards the 20-day moving average as well over here. So this zone over here will be my pivotal support zone. Okay, so let me put it. Okay, So why a zone? Because of the congestion area previously that's been seen at 32.52, and the 32.77 is the 50-day moving average. And if you do the Fibo extension of this minor uptrend phase that was taken shape from 15th of May all the way up to 6th of June, we do the Fibo retracement. Okay, 32.52 coincide closely with the 50%. Okay, Fibo retracement. All right, so let me put it in writing. So this one here slash 252. So this is like a short-term pivotal zone. Okay, so first support level to watch, which is the 20-day moving average. The price action managed to bounce right now. Okay, at 32.96. All right, so 32.77, 32.52 short-term pivotal support level. Maintain that bullish bias on Gold XAU slash USD. First resistance to watch for today will be at 33.46. Okay, so only a hourly close and a bullish breakout above 33.46 that would kind of potentially almost eradicate the bearish momentum of this current corrective decline or slide that has taken shape from last Thursday all the way down to this Monday in low at 32.96. All right, over here. So above 33.46 exposes the next near-term resistance level at 34.17, 34.35, which is the minor swing high of 8th of May and 7th of May. Only a sudden bearish breakdown below 32.52 that would see the extension of this minor corrective decline to target or expose the next near-term support at 32.0, 32.04, which is the medium-term ascending trend line from 31st of December 2024 low. So lastly will be the West Texas oil. So the West Texas oil continues its upwards movement over here. So right now it managed to clear above the 65.40 level, which is the minor swing high area of 23rd of April. All right, over here. So given that it managed to clear above this level here, so this will be like a pullback, support. Okay, so let me push it down lower. Okay, adjust it. Okay, so this could be the pullback support level to watch for today, or it's a zone, I would say, between 65.20 and 64.68. Okay, 64.68. So this is the pullback support zone over here. So given that RSI now is coming very close to the overbought level, it's coming very close to overbought level again, and the fact that it's now in fact the fact that previously it hit the overbought, want to hit a second time the overbought, and right now it starts to retrace down from the overbought, so bearing the fact that there could be a risk of a minor pullback during the European session. Pullback support level to watch will be this first support zone at 65.20, 64.68 over here. So I'll still use this range breakout resistance now turns into a key short-term support level at 64.06. So previously it was resisted on 14th of May, 21st of May, and a couple of times in June, 2nd of June, all the way down to 5th of June before staging that bullish breakout on last Friday. So this level will still be the key short-term pivotal support level at 64.06 to maintain this ongoing bullish bias for the extension of this corrective rebound sequence. Next resistance level to watch will be 66.27, followed by 67.35 next over here, which is the congestion area of 3rd of April and 3rd of April. Yeah, this level, this zone here. Okay, however, if price action starts to have a bearish breakdown of hourly close below 66.06, then I would say that this corrective rebound sequence is game over as price actions try to reintegrate back into the range configuration again, then may expose the next near-term support level to come in at 62.74, which confluence very closely with the 20-day and the 50-day moving average in the first step. All right, so that sum up the second segment of today's daily dose, which is the coverage of the intraday technical outlook on all the major cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for as we head into the European session thereafter? Key data will be surrounding more to the UK economy, where at 2 p.m. Singapore time, UK will report the labor market data, unemployment rate, and employment change. So that could potentially impact the sterling dollar, the sterling crosses, and the FTSE UK 100 CFD index. So as we head into the US session over here, so things will be rather quiet. No key US session data to look out for as well, with the fact that we have two Federal Reserve officials speaking, two ECB officials speaking, pardon me, ECB Bosch and ECB Donnery at 10:30 p.m. Singapore time, but market participants will be watching out for that potential. Will there be any potential conclusion up from US and China as they head into the second round of the trade talks in London that will kickstart in Tuesday UK timing, 10 a.m. UK timing, so that is Singapore time 5 p.m. Okay, so this will be the key focus for today. All right, so with that, that sum up today's daily dose of market insights. Do have a great day ahead, and we shall speak again tomorrow. Thank you.